Hello and welcome to a brand new episode of Gyan from the Pehelwan on Fintech Ki Baat. Today we have the pleasure of hosting Mikhil Innani, who is the CEO and MD of Apollo Finvest. Apollo Finvest is an AWS for lending, and Mikhil is the one who is spearheading the entire thing. Before Apollo Finvest, Mikhil has also been the director of product at Hotstar, and prior to that, he has founded one of our favorites, medtech startups called PharmEasy. So thank you so much, Mikhil. It is an honor having you here. And over to you if you just want to make a quick statement and a brief about what Apollo Finvest is doing for digital lending, post which we can start in the conversation.
Yeah, thank you obviously for having me here. It's a pleasure.
It's a pleasure.
Yeah, absolutely. So I think, like you rightly basically mentioned, right, Apollo, of course, we're a public listed NBFC. I like to think about us as a tech company who happens to have an NBFC license as well. In one simple line, what we do is, we enable any company to start offering digital loans in a matter of, 48 hours. So that's basically what we do. Today, I think we work with about 40 odd fintechs to enable them to start doing, digital loans, in the ecosystem at this point in time. And we've been doing this now roughly for about 4 odd years. It's been an amazing journey. The best part of my job really is to work with many entrepreneurs, and always basically build a platform which allows them to kind of chase their ambitious targets and ambitious products that they want to come out and obviously serve the financial ecosystem in India. So that's a little bit about us and what we do so far.
Thank you so much, Mikhil. Moving on to the topic of today, we are going to talk about everything digital lending and focusing a bit more on how revenue-based financing, financial inclusion, and housing finance will develop in the future thanks to technology. So we'll start off with what is your view on the current digital lending landscape, and where do you think are a few shortfalls that can be addressed by technologies?
Oh, absolutely. I think, fundamentally, I think, the biggest promise of digital lending, right, is in one simple line, today 90% of India is basically unserved from a credit perspective, right? And
Definitely.
realistically, when you think about it, like the only way to kind of serve them is using technology, right? Because if you set up, branches everywhere, it's just not financially feasible.
Agreed.
So, at this point in time, honestly, it's, there is no other option but to go digital. I think if you peel the onion even further, the best way to kind of do this is to really empower companies which already have the distribution to start distributing financial services, right? Like as an example, your Amazons, Apple, Zomato, Google, Ola, Uber, all of these guys, right? They have so many customers already on their app and, using their platform. So, the cost of customer acquisition for them is zero. So essentially, they can start distributing financial services in very small ticket sizes and sachets, which are actually affordable by the end customer, right? So that really pushes the envelope even further. Obviously, if you add Geo on top of that and what it's done, right, to basically the country, I think it's I think a landmark moment, for India, right? Like it's just crazy to have so many people online, and that the momentum of getting people online is just not stopping. And it's extremely empowering, right? And what it's going to do in many sectors, obviously financial services included, is just crazy. So when you combine that with digital lending, basically, or actually digital financial services overall, right? It's just going to enable access to financial services very easily to a larger spectrum of users. And the most important problem so far has been just the cost of serving these customers, right? So as an example, if somebody wants like a 20,000 rupee loan, previously it was just not possible because the cost of processing a loan was just too much. Ultimately, what the digital infrastructure is doing is it's making and trending the cost of doing a transaction towards zero. So then there'll be no difference basically between doing a 2 lakh rupee loan versus a 20,000 or 2,000 rupee loan, right? Because the transaction cost is the same. And when that happens, it's just crazy amount of inclusion, which can easily happen at any point in time. So that's really, I think, the big thesis, which is going to be paying out in the digital lending ecosystem. So that's just the building block, right? Now, when you think about where it is today, I personally think it's probably at 2% of its potential. because I think so far what we've seen is, right, we've seen like very so here's I break it down, right. There are like every internet product, it basically follows these three phases, right.
Right.
Phase number one is when you look back at the history of the internet, it probably started with companies which were companies like a Craigslist or an OLX, right, which are open ecosystems, right, essentially, where
Right.
buyer and seller is there. Basically, they can meet each other, but it's a very loose experience, right? And similarly, that's how fintech started, right? Where there were,
Right.
policy bazaars of the world or loan bazaars or whatever you want to call them, where people used to come online and people used to just basically apply for a loan. They'll connect you with a bank or NBFC, and you both basically figure it out, and they'll just earn a commission to make you guys meet.
Right.
Then you have one step further, which happened in the internet ecosystem, which is like a little bit of a I would say semi-closed platforms, right? Amazon and Flipkart, right? Where there are marketplaces, right? But it's a controlled marketplace. Where, as an example, if you call for an iPhone and you end up getting a brick, Amazon and Flipkart will take responsibility and help you out to make sure you get the product that you want. So they control the user experience. So similar stuff is happening in the fintech ecosystem today, where it's not only about just connecting you to the lender at the back end, but actually customizing the product and the user experience and making sure if they think you're eligible, they'll really they do their best to make sure you actually get the loan and the product as per the user experience that they want to deliver, right? The last thing which is happening, right, which I think is where fintech is really going to take off, is basically fintech taking complete control of the ecosystem, right? Where they do the underwriting, they decide the product, end-to-end user experience is decided by them, and that's where the real USP really is, right? So end-to-end vertical integration, and the lenders at the back end become more like infrastructure players, right? Which are just completely white labeled, and the user experience is completely managed by companies like your Amazon, Flipkart, Ola, Zomato, whoever it is, who's going to start lending. And we'll talk a little bit about in the future as well about how I see these guys coming in with a tsunami of capital and changing the game altogether. But broadly the ecosystem, I would say, is evolving through these three phases, and I think right now we're in phase two. Very, very soon, over the next 12 months, with so much capital coming in the ecosystem, I expect phase three to kick in anytime.
Got it. So as of now, the situation is such that everyone wants to get their hands on the revenue that is being generated from lending. So हर कोई lending करने के लिए घुस रहा है, right? I mean, embedded finance has been a buzzword for almost just after COVID started. It became a big buzzword, and embedded insurance started showing up way before that in Ola and all of that, right? Insurances. Your Make My Trip started giving you out. If I'm not wrong, they had a tie-up with someone from Capital Loans or someone to give a credit line way back in 2018 that would allow you to finance your trips. And for some reason, it eventually fell through. And now again, they started with a new company called Trip Money that does that. So embedded finance is the way forward. And as you rightly said, the finance providers as of now, like banks and NBFCs, are majorly going to become finance as a service platforms on which all the companies with the customer penetration will go, so that the cost of acquisition of customers for the lending companies will become significantly lower. And how do you think, or who do you think, or rather, will play a pivotal role here in essentially pushing out these services in the, the less penetrated market in the rural areas? Which of these companies? Would it be the, as of now, the Amazon, Flipkarts, or could it be the travel companies, or could it be the network providers like Geos, or who would it would be a mixed effort?
For me, it's pretty simple. I feel like over the next decade, any company which has transactions flowing through them is going to start offering financial services, right? And let's take an example, right? So let's talk somebody like, Amazon, right? Now, Amazon as an example, they have the opportunity to provide financing at two ends of the spectrum. One is to their merchants, right? And when you think about merchant financing, right? And, and this example, which I'm about to give, you can apply this to Zomato, Ola, any marketplace really, right? And the way this kind of works, right, is very simple. Ultimately, what happens is when you're running a marketplace like Amazon or a Zomato, the quality supply is limited, right? And the demand, more or less, India is becoming pretty strong in terms of demand, right? You can do enough marketing and you can generate demand, but ultimately it's about delivering quality products and having a quality timeline, for delivery. So if there are limited set of these, merchants which are on the platform who can, qualify for this, what Amazon, Flipkart and all are going to start doing is they're going to start realizing that if we have to scale, these merchants have to scale along with us, right? And these merchants need to end up getting working capital. Soon, right now the problem statement is that, they are getting some degree of working capital, but not to the degree which Amazon and Flipkart and Zomato are happy with, right? Because they want to grow 10x. The working capital that they're getting is only enough to grow them 10%, right? So there is a big gap over there. Essentially, what's going to happen is that Zomato and Amazon and all, right, since they're the ones getting the orders to them, right? And at the same point in time, the customers pay them, they pass on the money to the merchant, so they control the cash flow as well, right?
Yes.
So what is going to happen is that they're going to start themselves, basically starting to do loans to these merchants directly and just do a deduction of source, right? Because when the money comes in, when the sales happen, they'll collect their EMIs every single day. And the merchant will also be very, very happy because ultimately leads to more sales and more profits, right?
Right.
Because the merchant really doesn't want a loan, right? That's the thing which people don't understand about the lending industry is that nobody's looking for a loan. People mostly want a loan to do something with it, right? And businesses want a loan primarily to scale up. So ultimately, if you're providing them with that capital to help them scale up in whatever format, they'll be more than happy to take it, right? And one step further, what is going to start happening, right, is this is where I think fintech is going to completely leave the traditional lending industry completely behind, is where a Zomato or a Flipkart or an Amazon, they are going to actually go one step further than just providing capital. Like imagine Zomato, right? Now they're dealing with only restaurants. A restaurant needs working capital for basically buying typical restaurant stuff, right? And 80% of the restaurants, in order to expand, require the same stuff, like equipment, space, all of the more or less same stuff. Now, what Zomato will do is instead of just providing them only capital, they'll go and buy all of this stuff in bulk, right? So not only is the restaurant getting capital to scale up, but they're getting equipment at incredibly competitive pricing, right? So it's efficient scaling. Now, this is something which no traditional lender can do because HDFC can't just start focusing only on restaurants, right? They are like a very horizontal play. So this is where vertical plays are going to come in and really drive that dagger, where everybody else is rendered I would say useless in many ways because you can't compete with that, and that's going to be so powerful, right? So to me, this is a huge play, which is going to start playing out, and I think like this is where the tsunami of capital is going to come in the fintech universe, right? Everything so far is more like very plain and simple. There's an app, people apply for a loan and get the loan. That's great from a retail perspective, but I think from the merchant perspective, to drive business and drive growth, this is what's going to happen. I think from a customer perspective, right, which is a retail customer's perspective, again, it's going to be what you're already seeing. There's a wave of this buy now pay later, right? And even though people say that okay, this is something new, it's not something new. This is something which Bajaj Finserv has been doing since donkey years, right? I think the reason why it's picked up right now is because a firm had an IPO in the US, and they basically are trying to say that we are Bajaj Finserv for the US, in short, right? Now it's going to happen in India too, right? Because, and it's not surprising, because just think about it in a very simple way, right? Imagine if you are Flipkart, right, and that there are 100,000 customers which you have done so much marketing and they are coming to buy stuff from your platform. Now, the best people on your platform, you already know who they are. Bajaj Finserv is basically, serving only people who are basically 750 plus CIBIL score, right? And everybody can see Bajaj's books and be like, what, they have less than 1% NPA. There's no magic sauce over there. Magic sauce is that they just give money to people who are highly creditworthy, right? So Flipkart is going to be like, why am I giving this guy any kind of commission, to finance amazing customers on my platform? I'll only do it. Equity is cheap at this point in time. There's so much capital in the ecosystem. I'll only do it. No worries. So what's going to happen over the next decade is that the best customers on all of these platforms are going to get direct financing from the Amazons, Flipkart, Zomatos, whoever you want to think of. And all of the customers which are not super credit worthy are going to end up, being directed towards traditional lenders, So over a period of time, for traditional lenders, actually the risk is going to go up,
Okay.
right? Because they'll get customers which the first parties don't want to finance, and rightly so, right? It's almost like going to a Mercedes showroom. They always have a Mercedes guy ready to finance you because he knows the guy who's looking to buy a Merc is very, very credit worthy, has a lot of money. I'll only finance him. If I think, I don't think you should be affording a Merc, I'll be like, cool, you go to, there's a HDFC ka desk over there. Tell them, you go to HDFC and you take a loan from him because I think, I don't think you're credit worthy. But, if HDFC wants to take a risk on you, go ahead. I just want to sell my product. So that's what's going to happen.
That's a really interesting thought process. What I really want to understand is how do you see these vertical plays playing out in the long term? Do you think these vertical plays will eventually be their own lending businesses, or do you think it will be just a front end for traditional lending players to loop in and collaborate with those guys, essentially acting as lending as a service platforms?
I think what's going to happen is that very honestly, I think it's going to be vertically integrated, to be honest, because it's just, to me, I don't think personally, these partnerships work, very honestly speaking, right? And, we've seen examples of this, right? We've seen Paytm trying to do a partnership with ICICI. I think that, again, burnt apart, and I think they did less than 100 loans together. Because it's chalk and cheese, right? I'll give you an example. Like, if you ask the product managers at Flipkart, right, in their finance team, they absolutely, hate their partnership with traditional lenders because, it's super simple, right? Imagine they're spending millions of dollars on marketing, trying to acquire customers, and he's at the checkout page and they're getting rejected because, Bajaj or HDFC doesn't think they're credit worthy, right? Now, Flipkart is like, listen, I know this person's credit worthy. I know where he lives. Right. And he's been ordering so many things from me every single month. He spends 20,000 rupees on Flipkart. So, he has the money. I have some data points which make me feel incredibly confident of underwriting this guy. Right. So they want to give this guy the loan. But, HDFC and Bajaj Finserv are like, I don't care about any of that data. I'm going to underwrite using my algorithm. Right. And that creates a lot of friction. Right. And ultimately what happens is in this relationship, one person does not need the other, and the person who does not need the other is actually Flipkart. The only reason why Flipkart is not doing this right now is because of two reasons, right? Reason number one is they haven't got the NBFC license. Reason number two is actually it's not yet, I would say, priority number one for them.
Right.
But it is now going to be priority number one for them soon because all of these guys are headed towards an IPO. Right. And if an IPO happens, they need to grow like crazy to justify all of these valuations. Right. And the only way to grow like crazy is to have more customers buying stuff from you. But if 90% of India is ineligible, to buy stuff off your platform because it's they're not credit worthy, it's a problem which by default you have to solve for. Right. So that is when they will be like, in India to grow, you have to solve for credit. Right. And this is when they'll be like, we need to partner with, NBFCs and banks who are ready to do a deep integration with me, allow me to take a large chunk, of the underwriting and the risk, right? Because I know my customer the best, right? So let me do that. This is where they will partner with companies like an Apollo Finvest, where, they'll be very, very clearly like, listen, you're a world-class lending platform. You take care of the tech, you have the NBFC license, you bring in the capital. But, I'll be customer facing. Let me design the user experience. Let me design the product. And that's when that kind of vertical integration happens, right? That's a true partnership which will kind of work,
Got it.
Right now, what you're seeing is a lot of partnerships which start off saying that, listen, we've done 10 partnerships with 10 banks and NBFCs. None of them really work because ultimately they have less than 5% approval rates. So this causes crazy amount of frustration with the product teams there. Then eventually they realize that, listen, it's not about having 10 partners. It's actually about having 1 or 2 partners at max, but having, really high approval rates.
Right. Definitely, I think that is the way to go forward. I mean, once the lenders just sit back and don't interfere in the customer journey, because that is what the customer owners are the best at, right? Companies like Flipkart, Zomato, and all of those guys, they know their customers in and out. I think that will be a seamless lending experience. quickly, just a slight segue into how Oken will completely fit into all of this. Since we talked a bit about revenue-based financing and Zomato and all of those guys financing the merchants, how do you think Oken will be playing a role over here?
Um, very honestly, I let me put it this way, right? I think Oken basically what it does, right, in very simple words,
Mm-hmm.
right? If you speak French and I speak English, right, we both can't communicate with each other. So
Right.
what Oken does is you can speak French, I can speak English, but Oken will do the translation for us, and we can seamlessly
Mm-hmm.
talk to each other very smoothly, right? So
Okay.
what Oken really is, in very simple words, right, is it's a simple, unified protocol for fintechs to basically integrate with lenders, right? And
Mm-hmm.
it's a uniform way to integrate and a uniform platform, which basically means that if I'm Zomato, right, and I want to partner with say 10 lenders, as an example, instead of me going and knocking everybody's door saying, "Arey, give me your API layers, I'll figure out integration with you," and figuring out each other's uniqueness for 10 different lenders, all 10 lenders will have the same way to integrate. So it's seamless and easy to integrate with each other. So it will
Mm-hmm.
allow Zomato to integrate with 25 lending partners if they want to, with significantly lesser effort than today it is, right? Like as an example, I'm pretty sure right now integrating with the traditional lender is like a year, right? 6 months to a
Mm-hmm.
year it takes, which is nuts, right?
Right.
But to me, is this, is it's going to be it's a nice to have in my opinion, right? Like I'm not one of those guys who think like Oken is like amazing. I think it's a nice
Mm-hmm.
to have, because the reality of it all, no, is that ultimately, good lenders, right, already who are, or I would say tech savvy lenders, right? As an example, Apollo Finvest, being one of them, or uh, we've already built technology in such a way where our integration happens with fintechs in 48 hours, right? So that's the benchmark
Wow.
already, right?
Mm-hmm.
And what most people are actually realizing is the problem is actually twofold, right? The
Mm-hmm.
problem is, number one, yes, to integrate right now with traditional lenders, it can take forever, like 6 months or whatever. But the biggest problem after that is the credit, right? Because even
Mm-hmm.
if I decide to spend the effort like 6 months to a year and I'll integrate, because you have so much money, the capital is cheap, so I'll make that effort, right? But the problem is, even after this integration, you actually don't give my customers credit on, right? Only
Right.
5%
Right.
get approved, and then I'm incredibly frustrated that all my effort went waste, and I'll be like, screw it, I'll only work with somebody where I'll have larger degree of control, and then they
Right.
pivot to
Right.
somebody like an Apollo, right? So I
Mm-hmm.
think personally, if somebody wants to just build a marketplace, right, where they want to have 10 lenders at the back end, and they're okay with low approval rates and they don't want to take complete control of the ecosystem,
Mm-hmm.
Oken will be amazing, because it'll make it very easy for anybody to start a marketplace.
Right.
uh, but to me, having been in the lending ecosystem for the last 4 years, I think integration is not such a big challenge, as long as both companies are tech savvy companies, which I think is
Mm-hmm.
table stakes right now. For
Right.
any bank, NBFC, I think you need to have a stellar tech department.
Mm-hmm.
um, I think the real problem to solve, for all of these lenders is going to be, how do you actually, work with all of these, fintech players who have a very, very different ideology when it comes to underwriting and risk, right, than
Mm-hmm.
what they have, right? And, the problem statement really for all of these traditional lenders is that ultimately, digital lending for them is less than 2% of their entire portfolio, right?
Right. Right.
So if you're the CEO of those companies, right, unless you're a person who's like, very, very, unless you're the founder of the company and, you don't care of, quarterly results, right,
Mm-hmm.
you're just going to have to, focus on the 98, 99% of your business and forget about this 1%, right? Companies who are founder driven, who have a lot of stake, in the company, can take very long term bets, right? They can just be like, whatever is 98, 99% of my business, well, it may be today, but I think 10 years down the line, it's going to be probably 60, 70% of my business is going to be digital. 30% is
Mm-hmm.
going to be, the physical stuff which is going on now. I want to take a long term bet. And, that's what I would recommend for all the traditional lenders out there. They need to make big and bold bets, towards the future. Otherwise, very, very soon, they'll be rendered, you know, pretty obsolete.
Understood. I think that definitely speaks on its own. I mean, if anyone, any of the bank, I mean, most of the banks that we have spoken to, or personally also have spoken to, are either already have an existing rudimentary digital lending stack or a digital stack, or are in the process of building a stack that can essentially, be scaled up for a digital business model, even on the neo banking side, as well as whatever other products they have. They are building API stacks or all of that, even though it may be rudimentary or they might be experimenting. But I think that speaks on its own on what kind of bets they have taken for the future, right? I mean, that is saying. Moving on from that, when we come back to what do you say, revenue-based financing for merchants, right? We spoke of merchants that are covered by companies like Flipkart and Zomato's and all the other huge companies. But how do you think will merchants who are not essentially under the umbrella of any of these guys will be addressed? Like when you look at local SMEs that are into, let's say, the traditional what do you say, the iron market or iron and steel markets, or the other traditional industries in various locations, like specific sugar industries in Gujarat or other industries. These kind of merchants don't have an aggregator umbrella over them, right? Some of them are on India Mart, and that could be one way to get revenue-based financing to them. But apart from that, most of these merchants depend on either local money lenders, or they try to arrange it from friends and family, or whatever other ways that they might have. So how do you think this segment will be digitized from a revenue-based financing point of view?
I think the power law there, right, in terms of revenue-based financing and in general merchant financing is going to be the following, right? I think number one is, if that merchant is part of a organized, closed marketplace, right? Something like a Zomato, Swiggy, Amazon. It'll come from first parties. As long as you're in their top 20%, 30% merchants, they themselves will be very, very eager, and I would say have enough incentives to fund you so that you grow on their platform and they grow in turn, right? So that's number one. Number two, actually, the people who are going to be pretty strong in the revenue-based financing game are going to be the payment gateways, right?
Okay.
Like a Razorpay, InstaMojo, Cashfree. They have so much data. They can slice and dice by verticals and actually start doing revenue-based financing very quickly to the balance, 60-70% who are not getting lent to by the first party, platforms like a Zomato or a Amazon, because they are not maybe key to them, but they're medium and small enough that a payment gateway like a Razorpay or an InstaMojo may want to do lending to them, right? And again, all of this is, the key factor here is for both of these guys, right? Payment gateways and the first parties, the money is flowing through them, cash flow is flowing through them. So the risk is, can be greatly covered, right?
Right.
Now, the number three player, which is going to be there is going to be independent companies focused on doing revenue-based financing, right? So, obviously, there are a lot of these companies coming up nowadays, right, which are being VC funded, which are focused on doing revenue-based financing, especially for D2C companies, right? Because, their entire thesis is on the fact that, these companies that they're funding, basically somehow they receive money from online sources, right? And they ideally require money for doing more marketing, right? So I'll give you an example. Suppose you're a t-shirt company, right? Who is, selling something on your website, and, you're receiving, payments from Razorpay as an example, right? And the money that you're spending for marketing is on, Facebook and, Google ads or whatever it is, right? So what these payment gateway companies, the revenue-based financing companies are doing are basically going out and finding such companies and not again giving them working capital loans inside their bank account, but actually funding their Facebook and Google ads account directly, right?
Oh, okay.
So they're controlling the end use, and this is critical when it comes to doing lending, right?
Agreed.
So, the key thing to keep in mind when it comes to revenue-based financing is you should always fund a person's growth, not expenses, right? Like by default, if you put so much money inside their, Google ads or, Facebook ads, that means more stuff is going to sell, right? And when more stuff sells, it's going to come through the payment gateway, and over there, revenue-based financing take first side on the receivables, right?
Right.
In this way, right, it doesn't matter what kind of company it is, right? Tomorrow it could be like a sugar factory, right? What they have to do is they have to keep into mind what is actually the smartest way, to basically fund their end usage and growth, right?
Got it.
As long as they're able to determine how to fund that person's end growth, right? Then take first right on the cash flows. This is the formula basically to go ahead and do revenue-based financing. And in revenue-based financing, depending on the industry, they may have to take a very vertical by vertical approach. I think if you're a revenue-based financing company and you're going horizontal, you're funding a sugar factory or funding, I don't know, like a cotton factory as an example. The approach can't be the same, and I would not encourage that. I would always tell you that go vertical by vertical, understand that industry, productize this form of lending, in that particular industry, and then once you feel your industry is very very solid and working smoothly, then you can explore other verticals.
Got it. I think that does make sense. You'll have to find a way to essentially fund the growth and not expenses, as you rightly said. If you want to do that, you need to penetrate deep into that vertical and understand how the entire supply chain works and where essentially are the main revenue generating cash flows going, right? Maybe it's a supplier credit or marketing or whatever it is for that specific industry. You need to identify those and then find a way to fund those without actually putting the cash into their account and rather directly into the end use. I think that could be the right formula as you suggested. So, that is about revenue-based financing. Now, we'll talk about the most undigitized segment in the entire market, that is the housing finance segment. There have been a few companies who have tried and failed, or they just end up becoming DSA who has some sort of a digital journey. But true digitization of the housing finance industry, I don't even see a feasible model yet. I haven't seen a feasible model out there yet. So what is your view on it? And if you have something in mind on how that industry could be addressed?
I think, before you attack that problem, I think what people should do is actually slice and dice the entire experience of buying a house, right? And actually understand what are the building blocks of buying a house, and start digitizing that one by one before you try to digitize the entire lending experience over there, right? Like, I'll give you an example. One of the biggest problems in India, right, is you can go to one of the most fanciest neighborhoods, right, in the city that you live in, right, where each house can be costing millions of dollars as an example. But you will notice that not every building there is actually pretty fancy. Right. There'll be some buildings which will be very, very average. And the biggest reason for that is, the difficulty of doing transactions in India when it comes to buying properties and selling properties, right? Like nobody can seamlessly just sell a property in 48 hours. Nobody can seamlessly buy a property in like 48 hours, right? It's an extremely contrived process. I think, before we even go into this process of, how do you digitally just buy a loan, buy a house as an example, I think what needs to be done is, simple example like this needs to be taken care of, like almost like, legal as a service, right? When it comes to, buying or selling a house should be, first building block over there, right? Once you digitize these small building blocks, right, that is when eventually, all the atoms will be in place to form that molecule, essentially, of digitizing the entire experience of buying and selling a house, right? So that is what needs to happen, and that we are seeing, by the way, some companies in the legal tech space, right? So I think slowly but surely you start seeing all of these things happen, right? Like, I'll give you an example. One of the things which I've noticed quite a lot, right? There will be I've seen people when they want to buy a house, right? And some people basically they may be buying a house when they don't even need a loan. What they do actually is that, they'll apply for a loan to HDFC just because apparently, to get your house legally, before giving a loan, they legally vet your house, right? And I think they have to pay some 10,000-12,000 rupees for doing this. Okay, so it's incredibly cheap, right? So people will apply for a loan. They see if HDFC is approving the property first, and the minute they approve the property, they will actually cancel their application. So in short, they only use the legal feature of HDFC, which is doing the legal due diligence for 10,000-12,000, and that's really it. Right? They don't really want a loan.
Mm-hmm.
Now, this is a telling feature, right? Which basically means that in India, they don't trust only buying anybody's house and they don't want a loan also. But they just
Right,
want to have that peace of mind, okay, what I'm buying is actually legit, right?
right.
So this, is the first thing which needs to be solved. I think once you solve for this, no, automatically, then, doing this, just the process of buying a house digitally will be so smooth because people can do it with confidence, right? The
Right.
problem statement in, buying anything which is super expensive, doing it
Mhm.
100% digitally, it's very difficult for people to do it, right? Unless
Agree.
you're buying a super commoditized thing, right? Suppose, I don't know, like, if you're buying a Merc, right,
Mhm.
which costs 50 lakhs as an example, right?
Right.
You can imagine actually buying it 100% digitally because all Mercs are the same.
Yep.
But a
Mhm.
house is so, complex, right? No, like 10 houses, are not exactly the same, right? Every building has its own quirks to it. And, you'll always be wondering if there's a legal minefield over there. So this problem needs to go away,
Right.
right? The minute it becomes, commoditized that, okay, legally everything is sorted, you just decide whether you want to buy it or not. Then, people will be like, what, let me just, digitally apply for a loan. If I get it
Mhm.
seamlessly, people will be able to give you a loan. Even banks for that matter, right? I mean, I don't blame them today if
Mhm.
they have so much paperwork, so many crazy things going on, because they have the same problem that we have, that, what if it's easy to come to know whether Mikhil, is credit worthy or not to get, say whatever loan he wants to buy a house. The biggest
Right.
problem that they actually have is whether this house is worth anything or not. Because,
Right.
pata chala, we pay the, person who
Mhm.
wants basically, to sell the house, we pay him like, I don't know, $500,000. Mikhil is living in a house of $500,000 where he's paid 20% down payment, but
Mhm.
it's actually not worth even like, I don't know, 100,000, right? So Mikhil can just be like, screw you guys, this house is, I just got a loan for 500,000 and this house itself is worth 100,000. So this
Right.
fear even traditional lenders have, right? So I think this is the thing which needs to be solved for before we actually get into digitizing, buying a loan and selling a loan, selling a house.
Got it. Got it. So ideally, what you're saying is that the real estate industry itself is not primed for it to be digitized enough to attach a digital lending product to it or make the lending for that piece digital. And from what you said, I think it's still a decade down the line before we solve out all the issues because as of now, I mean, we all know that real estate industry is like the documentation is haphazard at the best in urban areas. And if you go to the rural areas, there is no scope of identify who owns the property and what are the land records are completely messed up. So I think, yeah, it's mostly what I feel is around a decade down the line before we'll be able to see a proper digital lending product for that industry.
Yeah, I would
Great,
say,
great.
I mean, I'm a little bit of an optimist over there. I'll give you an example, right? Like, so,
Okay.
the digital lending industry also, right? The reason why it happened
Hmm.
is, over so many years, actually, the government has put so many building blocks in place, right? When you think about
Hmm.
UPI, when you think about Aadhaar, when you think about eKYC, all of this stuff, right? Suddenly came out of nowhere,
Hmm.
and it sprouted so many of these industries to become relevant. Like, digital lending as a concept can happen only because you can do eKYC, you can have UPI, you can have, Aadhaar, you can have all of these things done
Right.
100% digitally, very, very smoothly. And then, I can be sitting in Bombay and, there can be an app which is giving out a loan to some guy in Bihar as an example, right? Very smoothly.
Hmm.
So, you never know, right? What ends up happening in the real estate industry as well. I think it just has to become the eye of the tiger for the regulator, right? Like the minute they have 100% focus and realize that, listen, this
Hmm.
industry is absolutely messed up and it's holding, the whole country behind when it comes to, development in the real estate space. Um,
Hmm.
you'll start seeing action, right? You've seen some improvements with RERA, etc. happening.
Right.
Hopefully soon there will be something to make the whole buying process and selling process also easier.
Got it. Got it. So one final insight from you is I want to understand across the spectrum what has been the most innovative lending product that you have seen. I mean, it could be anything.
Um, you know, I don't like to highlight companies because we work with so many of them, and
Hmm.
everybody's obviously a dear customer. But I I'll tell you the kind of lending I really like, right? In one
Mm-hmm.
line. So basically, we like proprietary, lending. So I'll give you two examples of, this very broadly. So one is I personally like, and we personally like, vertically specialized players, right?
Mm-hmm.
And I would break them down into two categories, right? One is you can be a generic vertically focused lender. So as an
Mm-hmm.
example, you could be somebody who's focused on a certain segment in the market, right? As an example, you could be focusing on the unbanked,
Right.
segment, or you could be focusing only on people who are going abroad for their education, right?
Mm-hmm.
Or you could be focusing, as an example, on somebody, who wants to buy or who wants to get an IVF treatment, as an example, right?
Mm-hmm.
So like extremely clear, focused kind of lending, and
Right.
then you build, your specialization around it, right? Where you
Mm-hmm.
not only actually give this person a loan, but you try to make the whole experience like 10x better, right? Because you're
Mm-hmm.
so focused on that particular vertical, right? So specialized lenders, we really, really like. The number two kind of lenders that we really, really love is basically, productized lending, right? So I gave the example of cash flow many, many times. I
Mm-hmm.
think, that is such a potent combination, because we've seen people create portfolios which are A plus there, right?
Mm-hmm.
And it's not because they are so good at underwriting or they are so good at, having a massive collections team. Most people that, we work with don't, in the cash flow lending space, they don't have a massive collections team at all, right? They
Mm-hmm.
are actually true tech lenders, because they have worked for like maybe 6 months to a year to 3 years, as an example, focused on how do we basically make sure that the entire cash flow is productized, right? As an
Right.
example, you could be a payment gateway, right?
Mm-hmm.
They will focus all of their energy to make sure that the customer, makes the payment, using their payment gateway. They incentivize the merchant by telling them that, collect maximum of the payments that you're collecting through our payment gateway. So we have more visibility on your cash flow. We can give you more money as a working capital loan. You will grow more. And then every day as payments come in, right, they collect their EMIs, from them. So simple
Right.
structures like this, right, create a win-win incentive, and it digitizes this whole process of collections and lending. Like truly, like it's truly productized lending. And the best guys in this space are going one step ahead. Like it's again
Mm-hmm.
not only about giving this guy a loan, right, which he'll think, okay, it's at 18%, 20%, 15%, whatever it is. But what the best guys are doing now is that they've
Mm-hmm.
identified, listen, I am giving out a loan to maybe D2C brands, right?
Right.
Now they need money to do basically, say, Google ads or Facebook ads. So they realize that most of their customers are just sitting and buying Google ads and Facebook ads. So they've gone to a Google and they've gone to a Facebook and bought ads in
Mm-hmm.
bulk,
Mm-hmm.
right? So they get really amazing pricing, and then they
Right.
pass on that benefit to their borrowers, right?
Okay.
So as a borrower, right, to me,
Mm-hmm.
I'm in love with you, right? Because getting a loan is seamless. Number
Mm-hmm.
two, you are just deducting money from my everyday money, which is, coming through my way. But ultimately, I'm making more revenue and profit, right? Without you,
Mm-hmm.
which was not possible. Number
Right.
three, not only am I growing, but you are making sure I grow efficiently, right?
Right. Right.
So if you do this, right, I mean, as a, like, no borrower in the history of time has ever felt this special, right? If you do these kind of things,
Mm-hmm.
right? Because they'll just be like, without you, truly my business would not be as efficient, and I would not be able to grow. So these are two things, if you do know, you will have borrowers which are, just blown away by the user experience, right? So to me, specialized lenders and, cash flow based lenders who go the extra mile, these are two areas which, we really, really have loved seeing, people build for.
Got it. Interesting. I think this summarizes it very well. What you said earlier, right? You don't only just finance the expenses, you finance the growth and be a part of that growth journey. Once as a lender, you take one step forward and actually be a part of the growth journey instead of just even financing the growth becomes imminent, and you being a lender, you can bring economies of scale to that particular merchant and essentially exponentially help the industry grow. I think
Yeah.
that will, as a lender, that will be a sure shot way of generating more revenue for you as well. I think brilliant. This was a really interesting conversation, Mikhil. Thank you so much once again for coming here and joining us. It was a pleasure having you. Thank you so much.
Thanks, guys.